Market always evolves. You have to stay on top of things. I mean, I've been trading for nearly 20 years, and my strategies have evolved, year in and year out in order to stay on top of things like these zero DTEs that are coming out right now.
I think what you're seeing in Jaguar's case, and you see this in other automakers as well, they built this original car on the platform of an internal combustion engine platform.
All that and more, so let's get to it. Another down day for Tesla, about 2%. For the week, Tesla down a mighty 12.5%. 30-day chart down 27.5%. But going back 90 days, Tesla is still up 23.5% roughly. Year to date, Tesla is up almost 100% now. The pullback has been real, and I'm a believer. I don't know how low Tesla can go, but for the foreseeable future, your boy is in the put market yet again. Long term, my bear case still has Tesla at $364 per share, but you can't control the macroeconomic environment. Just because I believe Tesla's fair value estimate is $364 doesn't mean we'll get there. In the meantime, I have to factor in a multitude of mitigating circumstances. But if money isn't flooding into the stock market, you can't expect it to stay forever high. As for my options situation, just thinking about the money I've lost from Tesla's Q2 earnings till now, it's quite staggering and heartbreaking. Not just the money that was in the hands. That September 15th call before the Q2 earnings was gold, and I let it slip through my fingers. Couple that with the money I lost on the downslide from 3 all the way down to 215 where we are now. Yeah, that was an opportunity that I missed. But we can't beat ourselves up for it. What do? We learn and we move on.
Public policy questions about the general explosion of derivatives in general. Gensler has raised this issue many, many times, and I think that's the subtext of what Rubner's trying to say.
That was a great report, thank you. I wanted to ask you if you think the time of year that we're in is really giving this type of activity more of an emphasis than it would otherwise have. And just to put some meat on those bones, 1.86 million zero-day contracts traded hands at the end of last week. That's about 55% of total index volume. That's Nomura data. So it is a lot of activity. But then the other side of that would be to say, yeah, but it's a ripple in the pond. It's market makers. They do their delta hedging. They get it done by the end of the day. It doesn't really move things that much outside of the effect of 1 or 2 hours.
Despite losing thousands of dollars in this past month, I've decided to dip my toe back into the zero-day options trading. I'm only going to conduct the zero-day trades on Fridays. How did I do today? It was profitable. Didn't make up for my losses this past month, but it's a start. I bought a couple 217.50 puts and traded them around 215. It's not a huge profit, but it's something. Zero-day options trading is the craps of the stock market, if you will. Placing those 2 puts was like placing a bet on Snake Eyes, or 12 the hard way, or 12 the only way. You know what I mean.
Way to think about that.
It is a good point at a time, seasonally, here we are. I mean, I looked up at the volume here at the New York Stock Exchange yesterday.
Pretty poor.
Almost at the end, it was like 400 million plus shares. Normally, we're over $1 billion, right?
800 to $1 billion. Yeah.
So
here's the question. What's the subtext here? Did this trading actually cause some of the recent swoon? And I think the answer is no.
You don't think so?
I think that, look, when you get volatility, it increases options trading by definition. So what tail wags the dog here? Does volatility cause options trading, or does options trading cause more volatility? Generally, when volatility moves up, particularly towards the end of the day, you'll have more trading that's actually going on. So I don't think it was a huge part of this. No, I think it's wrong to say. There's perfectly good reasons why we've had a swoon in the last couple of weeks that doesn't have anything to do with whether people are engaged in options trading. To your point,
the biggest days of this were days with economic data. The biggest days of this activity
that would make
was
sense,
payrolls on August 4th, CPI on August 10th.
That's when traders wake up and say, oh, I have a bet on the direction of the market.
They'd be trading
you would think the volume would be heaviest on those days.
We're so fortunate.
There's other reasons why the market's down.
We have so many different kinds of folks on the investment committee, people who do different things and have different strategies and use different methods in the market. Bill Baruch, by the way, I remembered saying a day on this show that you use zero-day options.
Yeah, I'm working on some strategies right now to implement these. It's as the market always evolves, you have to stay on top of things. I mean, I've been trading for nearly 20 years, and my strategies have evolved, year in and year out in order to stay on top of things like these zero DTEs that are coming out right now.
That doesn't just apply to trading. Whatever you're doing, don't remain static. You should always be trying to evolve, always be trying to grow. Take a page from Tesla's book, Disrupt Yourself, or somebody will be happy to do it.
I think they have a pretty solid impact. I think everybody that has spoken here at the investment committee just now has made a good point. I mean, seasonally, there's a lot of uncertainty. Josh spoke about the rate of change in the bond market on specific economic data days. You want to take a defined risk. And that's where these become a really good tool, is either hedging with a defined risk through a certain day or taking a defined bet for a direction. Now, where some of the problems can come in is late in the day. You look at yesterday, where the Goldman analyst spoke of that final half an hour. I mean, one thing from my studying of these zero DTEs I've learned is sometimes the bid ask can really widen up, and as liquidity starts to dry up a little bit on these specific options. So if somebody starts hammering some of these, it really, on the other end of it, the market maker is sort of exacerbating what he has to do late in the day too. So there is some tail that wags the dog at times, but at the end of the day too, we're also in a very big time of uncertainty right now, and being able to take defined bets day to day and use these as a tool, you would hope that this could be an advantage.
You're motherfucking right. Use this as a tool. It didn't cost much to make these zero-day trades. The implied volatility was somewhere around the 70s. I'm okay with that, especially for a one-day trade. As they mentioned earlier, there is not a whole lot of volume to be going around here in the months of August and probably leading on up into September. Grabbing a 50% return here, 75% return there. When you're dealing with drastic one-day movers like a Tesla, you're more than likely not going to be dealing with 1 or 2% moves here and there. A 6% move on a one-day options trade can be quite lucrative.
Bill, independent of all of this, whether it actually moved markets at the close in some of these more volatile days, is it a legitimate public policy question to ask about the proliferation of derivatives products in general? Gensler, there's been numerous studies about the explosion of derivatives in general. Is there any legitimate concern about that? And could it eventually become an issue where the tail does essentially wag the dog?
That's a tough question to answer. I've spoken with people who are, behind the scenes here making some of these and trying to get what their thought process is. And really, what they're trying to do is add more tools, advance their products. And right now, I think it is a good thing. I mean, there's obviously some concerns from time to time, but what the liquidity could be and what the impact is going to be. I think it's a good study. I think the regulators should continue to study it. But as trading evolves, as electronic trading evolves, and I think these tools need to evolve with it. And as a trader, you got to stay on top of your game and evolve too. That's what I'm trying to do right now, and understanding these as best I can.
Yeah, Bill, I appreciate you coming on very much, helping to at least add some clarity to what we're talking about, and not being suggestive in any way that this was an overwhelmingly large part of why some of the volatility was there. But nonetheless, it's what some people are talking about. We wanted you to explain it, and you did. And I appreciate
when Gensler talks about gamification of trading, this is some of the things that he brings in, the explosion of derivatives. So there's a broad, interesting public policy, philosophical question.
All right, Professor Bob, thank you.
Okay.
I don't know nothing about the ethical concerns of the gamification of the stock market, but I'm a firm believer in taking ownership of one's own actions. Not a huge fan of the government telling me what I can and cannot do.
I guess now with more insight, former Ford CEO and CNBC contributor Mark Fields. Mark, and again, we do a lot on EVs here, and I know people come at me and say you hate EVs. No, I love Detroit. We've talked about that. I want to make that clear.
So if you love Detroit, you have to be bearish on EVs? I get his concern about the employees that work in the big three. He's a man of the people. I get that. But his bearish stance on EVs is not going to change a thing. The people of Detroit that work in these auto manufacturing plants will be out of a job sooner rather than later if their companies don't switch to battery electric vehicles. And I don't mean just slapping a battery underneath a internal combustion engine and going, look, we've done it, EVs. No, they have to retool everything. Those individuals have to be retrained, ground up EV construction, first principles. Because it won't be just Tesla eating your lunch. It'll be Rivian. It'll be these Chinese automakers coming over. If you love Detroit, don't bash EVs. You need to be trying to get them to convert as quickly as possible.
That we're seeing this massive shift, and yet we're seeing some of the numbers are not good. What do you make of the Jaguar? Listen, lightly sold, smaller company, I get it. What do you make of the Jaguar news?
Well, first off, as you mentioned, Brian, it is odd that they would announce a couple of years before they cease production of this model that they're actually getting out of it. I mean, think about the consumer. If they know that model is going away, it's not going to be like, at the top of their purchase list when they're looking for an EV.
Unless you want a collector's item, who cares if it becomes a paperweight in the next 5 to 10 years? It'll hold its value as a collector's item, right?
I think what you're seeing in Jaguar's case, and you see this in other automakers as well, they built this original car on the platform of an internal combustion engine platform.
Mistake.
Modified it for electrification. And when you do that, you really sub-optimize. You sub-optimize for range because of the battery architecture. You sub-optimize for features because it has old electrical architectures. So a lot of these automakers are saying we're working and coming out with our next generation with dedicated EV platforms. And that's what Jaguar is doing. But it is, as you said, it's odd that they would announce this 2 years before because it's basically going to kill what little sales they have today.
As far as I can tell, this has been the legacy OEM tactic when it comes to electrification. Well, let's just utilize some hybrids to offset those individuals that might be a little more concerned about range. They can still use gas and still say that they're helping the environment. Hybrids, yes, hybrids. Let's push the hybrids out. Oh, wait, they have a battery electric vehicle that's won the Motor Trend Car of the Year. Keep pushing the hybrids. Let's figure this out. Let's slap a battery underneath the internal combustion engine and then see if the consumers recognize. See if the consumers notice it. Oh, they notice. This isn't good. These numbers, we're having these vehicles just sit on the lots. Nobody's even thinking about it. Maybe it's for another reason. Maybe it's because the charging infrastructure is not there, or maybe EVs aren't as good as we thought, or maybe the price is too high. Oh, Tesla's supercharging network. Oh, Tesla's price is coming down. Oh, their battery electric vehicles are better spec than ours. Oh man. Let's just do what Tesla does. Yeah, right. Let's start from scratch and just build a car that's designed for battery electric vehicles, right? I don't know how to do that. That's not my job title. It's not. You're fired. Give me somebody in here that knows how to build a battery. Oh, they all work for Tesla? I'm sure there's some people out there that let's see if we can poach some of Tesla's guys and bring them in here and see if they can help us build the battery electric vehicle properly. Oh, this is, you telling me I need to do what? It's going to cost me what? Are we sure that this is happening? And scene. That, my friends, is basically what I've seen from the legacy OEMs this entire time Tesla has been revolutionizing the automobile industry. Jaguar's Tesla killer is no different.
Maybe tick off some of their customer base, to your point, which they might feel abandoned. And then when they come out with a new car, they're going to be like, no, what? You dumped me once. We're not getting back together. The one thing I think Elon Musk and Tesla have done so well, where they really nailed it, is that they changed, to your point, the architecture of the car. Elon Musk understood, or somebody there did, that weight to an EV is everything because it impacts range so much. To your point, the regular car companies are just trying to take a regular car with all the luxurious, rich mahogany leather or whatever Ricardo Montalban said, and then throw a battery in it. Do the car companies that exist have, to your point, just completely almost become new companies?
Tony Seba once said, you can't just slap wings on a worm and call it a butterfly. The internal combustion engine is the worm in that scenario. Slapping a huge battery underneath, essentially cosplaying a Tesla, doesn't make it a quality battery electric vehicle. This shit didn't happen overnight for Elon and the gang. You're talking about long hours, research and development, Testing of all sorts, trial and error from the Roadster evolved into the beautiful butterfly that was the Model S. And the evolution didn't stop there. Oh no, we got Pokemon levels of evolution here, all of which build upon the previous model. If your base EV is shit, your evolution will still have a base of shit.
Well, to your point, the Ricardo Montalban, that was a fine Corinthian letter.
Thank you. I knew it.
We don't offer that anymore. But yeah, I think that, this is a case where every automaker, they're making this transition to EVs. It's somewhat painful, right? Because you're seeing the market, take a pause right now. And a lot of that has to do with going to mass adoption from early adopters, which is kind of easy, but going to mass adoption is hard to get that growth. But every one of these car companies are learning, right? They come out with their original vehicles to get in the marketplace. And like in the case of Jaguar, they did it for expediency's sake, to get an EV in the marketplace, to meet regulatory requirements, et cetera. But then they're developing the next generation platforms. So they're gonna take a lot of weight out. They're gonna optimize. The vehicles themselves will be much better. But this is an evolution. And like you said, with Tesla, first and foremost, Brian, they are a software and battery company.
What?
And that's been a big advantage for themselves because they were able to start from scratch. And that is what gave them the heads up on the rest of the industry.
Yeah, my neighbor who's got a Model S and loves it calls it the iPad car, but they call it that as like a term of endearment. And you just wonder, though, Mark, is Jaguar a one-off? VW's CEO recently making some comments about layoffs and lack of sales. I'm going to ask an insane question. Do you think there could be a major car company that just says, you know what, we're never going to be able to compete, it's not worth it, and by the way, we don't feel like going bankrupt, and gets out of EVs?
There is some credence to this. Can we compete, first and foremost? The answer is maybe, but it's gonna take like immense levels of determination. Doing what needs to be done is not necessarily what people want to do. I'd love a set of six-pack abs, but your boy ain't willing to put in the work to get those six-pack abs. But if my life depended on it, like if I didn't have six-pack abs by 2030 and my life depended on it, that's what's happening with these legacy OEMs. Your life depends on this transition, and that goes for all of them. Your life depends on you getting six-pack abs, and there's no easy way to do it. You're gonna have to start from the ground up. Stop building EVs if you want to and just focus on ICE. It'll definitely help you in the short term. As long as you don't mind going the way of Kodak and Blockbuster, all's good.
Yeah, I think it's inevitable. You're seeing this once in a generation, once in a lifetime propulsion changeover. If for any other reason, Brian, the regulatory regimes in all the major markets are literally forcing the automakers to do that, or they will be out of business if they're not producing EVs. The challenge right now for the automakers is how do they bring these EVs out with the appropriate, range and luxury and things of that nature, but at the same time get them to price points where they can make money and then the consumer can actually afford.
Look, the legacy OEMs aren't going to be able to produce a battery electric vehicle as good as Tesla. It's just not going to happen. I don't know what the most recent metrics are, but when you're talking about software, battery technology, and damn near every other metric, Tesla is ahead of the competition by like 4 to 7+ years. That's how long it would take them to catch Tesla if Tesla was standing still. But we know they're not. At the moment, Tesla is ramping up the Semi and the Cybertruck simultaneously, refreshing the Model 3 with Project Highland. Oh, and did I forget? Nueve Leon is going to come online sometime in 2024, synonymous with the ramp of the next generation vehicle. Tesla is doing anything but standing still. With the UAW strike looming around the corner, it's tough and getting tougher out there in Detroit. In conclusion, the options market is not for the faint of heart. If you can't stand the heat, get the out of the kitchen. And if the legacy OEMs throw in the towel on battery electric vehicles, that is an automatic concession that they don't want to be around in the next decade. In order for them to survive, they're going to have to make some hard decisions. Decisions that they're not going to want to make. But your livelihood is at stake. Well, that's all I got for you today. Be easy. Peace.